to Samvardhana Motherson. It was strong show from the company in Q4. Consolidated net debt has come down. Some one-offs as well in the numbers for Samvardhana. But our colleague Puneet spoke with the management, COO Pankaj Mital and CFO Kunal Malani, and he began by asking them about the highlights for the quarter gone by. Listen in to that full conversation.
We had very good performance on the wiring harness division, both in India as well as internationally. The units have continued to improve, and as we manage our company plant by plant, all plants started to show improvements after they were impacted by COVID and other challenges due to war, material supplies, and other things. So operational performance have been seen. We have improved inventories. As you saw, that the overall company has done very good return on capital employed from 11% of last year to 17% this year. And we also had very good communication with our customers to gain more volumes from them, support them, win more orders, and also to have pain sharing with them in terms of the impacts which were there due to the cost escalations which came in due to materials as well as on the human cost. So they're all around, there have been very good improvement, and we expect that we continue on our path of improvements in most of the geographies.
And if I might add on the 450 odd crores of adjustment you're referring to for the quarter, that has two elements largely to it. One is on account of improved performance, improved outlook of the business, and the internal restructuring that we have done. As you know, we have assimilated a lot of assets under SMR to BV, and also doing a country reorg. That's all enabled us to get deferred tax benefit for some of our past tax losses. So that's around about 230 odd crores, and the remaining 200 odd crores is on account of compensations that we have received from the customer against some of the forex losses that we had booked last quarter. If you remember, last quarter, we had highlighted that Argentina had a lot of one-offs in terms of the devaluation of the currency that happened, and that's been compensated by, partly at least, compensated by the customer in this quarter.
Now, just a follow-up on that. Now, going forward as well, whenever we will see if any kind of forex losses in emerging markets or any other geographies as well, do you expect to be compensated by the customers, even if not in, when we look at the full year performance, basically we will see any kind of quarterly lag go away. So going forward as well, do you see the rest of the impact, for example, for the Argentina business, you said, being compensated for the company?
Look, Argentina was a situation which, the currency was devalued by over 200%, right? So that's a completely exceptional event that happened, and hence it's against that exceptional event that we worked with the customer to try and find a solution. It's in the normal course, we don't expect forex compensation to happen in the normal course of business. On the contrary, actually, we try and see that most of our businesses are being done at the same location and in the same currency in which it is being supplied to the customer. So we try as much of natural hedging as possible, but obviously there are geographies like Argentina where this is a challenge and got aggravated because of capital controls that the government put in there to save foreign currency at that point. So hence it was an extraordinary situation, which is what we had highlighted in Q3, and again highlighted how the compensation came from a variety of customers there also in this quarter. So we did say then that we would be working with the customer to find a solution, and we did that in this quarter.
Now, I just want to talk about the capex plan a bit. We've seen roughly 4,000 crores of capex done in this particular year. That's almost double of what we did last year. And going forward as well, we are having 18 greenfield plants coming up in the next 2 to 3 years. 5 have been added in this quarter as newer ones. So I just want to talk about the capex plan in general over the next 2 to 3 years, and also how are you seeing the capex plan over the next year, since we are starting FY25? Any kind of not guidance, but any kind of range that you could give us? How are you seeing the capex for the company?
So look, I think the capex is a function of, again, the set of opportunities that we are getting. So do bear in mind that our order book is looking at close to 84 billion, and this is only automotive. On top of it, when we add Yachiyo, that's an additional potentially 4, 5, 6 billion that will get added. So it's a fairly large order book that we have, and the capex is in tune towards achieving it. Also, we had highlighted that the developed part of the world is still 10-15% below pre-COVID. It's the emerging part of the world where, like India, China, where at least automotive volumes have already hit post-COVID levels and even higher, and hence the need for setting up new capacities in there. That's how our growth capexes were embedded. There were 12 that we announced last time. There are 18 now, so 6 more have got added in this quarter. The total capex that we anticipate for next year is somewhere in that 5,000 crore level, plus minus 10%. And out of this 5,000, around 2,000 crores is what is going to get spent in these capexes on the greenfields, at least next year. And a fair chunk of that, at least this time around, seems to be also on the non-automotive side. Nearly 70% of this will be on the non-automotive side. So it's an outcome of, I think, the support and the trust that the customer has on us, which is reflected in the order book and then reflected in the investments that we are doing. And do note that, in spite of doing 4,000 crores of capex, in spite of, assimilating 10, 12 different acquisitions last year, in spite of all that, we have reduced our leverage. We have reduced our leverage ratio to 1.4x, pretty much the same at the beginning of the year. In fact, this quarter we paid down 1,800 crores of debt, and hence, from a pure financial perspective, I think we have all the wherewithal to manage the capex without necessarily raising any form of equity, and we still are on a deleveraging path as we move ahead.
Now, your presentation did give a lot of qualitative details on electric vehicles. So the percentage of India is roughly just around 2.2%, but for North America is upwards of 7%, for Europe it's 11%, China is at 26%. So how are you seeing, because the company is very, very global in nature, an outlook on EVs globally as well over the next 2 to 3 years? Because we are seeing that most countries have carbon norms, as well as we are seeing new emission norms for automobiles as well. How are you seeing the trend in general for EVs going forward? And also, if you could give us some more picture on India as well, as apart from the global picture for electric vehicles.
So we do see EVs are spanning out well, but the growth pattern, which was supposed to be quite steep, is not there so much in the current situation. Hybridization of the vehicles have also taken place. As far as our company is concerned, our products are powertrain agnostic. We supply to EV vehicles, hybrids, as well as ICE vehicles. And in that sense, you would see that the company has performed in this very disruptive environment in a very good way. Most of the car makers are going to achieve these norms, which are there in many different ways. So it's not just about focusing on one particular technology, and technologies continue to evolve. As far as India is concerned, also we do supply to the EV vehicles in India, hybrid vehicles as well as ICE vehicles. And we do see that the trend is that the car makers are trying to find many different solutions to the problems which are there in front of them to solve. So the technologies will continue to evolve. More and more solutions for the users will come in, and there will be lots of breakthroughs to meet the environmental regulations which are there. That's the direction in which we see that there will be multiple solutions which are there in the market.
All right, that's the management of Samvardhana Motherson.